Hey, welcome everyone to this month's market update. I want to give you a quick update on what's happening here in Orange County, but also just in general, because there are so many things going on in real estate at the moment with the interest rates, the prices, the demand, the supply, all these things. And there's a lot of talk about how's the recession going to affect us, how's a lot of things. So let's get started and let's go. As you well know, interest rates have gone up quite a bit since the beginning of this year. We started off the year just above 3%, and now we are at about 5.25%. So there's about 2% difference from where we started to where we are now. And many people thought that the interest rates were going to, they rise, the prices have to come down. That hasn't been the case. And this next slide here shows you that the impact of the interest rates on the housing prices when they go up, it's not always that prices go down. It does affect demand, and it has affected demand here, but we're still seeing multiple offers on anything that's really looking nice. Anything that is a nice house, nice area, and is priced well, is getting multiple offers, right? So the impact we've seen, as you'll see here on this chart, is interest rates go up, but also prices go up. They're not directly correlated or indirectly correlated, where prices have to come down when interest rates go up. So don't expect that to be the case. There is so much more that goes on, not just interest rates go up, so prices have to come down. Okay, so speaking of prices and what they are forecasted to do this year in 2020, here's a chart where several organizations, all deeply entrenched in the housing market, lending or, to some extent, research organizations or whatever. But here's their forecasts of where the prices are going to go from here this year. The numbers vary, but for the most part, they're all anticipating higher prices. The prices are going to go up by different varying degrees, some double digits, some less, and they're more conservative. But for the most part, all of them are forecasting increases in prices this year in 2022. Okay, here's an example of, and I know this doesn't really apply to Orange County, but this is just the average sales price in the US. If you buy something today in 2022 at $360,000 and you hold it for a 5-year period of time, which is very typical of people that are buying even investment properties, but just buying for themselves. They're living there for several years. 5 years is a generally short period of time. And as you can see in this example, this person or this family that buys at $360,000 is almost going to get $100,000 of equity in 2027, right? So the prices are forecasted to keep going up. And the reason for that is primarily supply and demand, right? The prices have not softened or they've not gone down. It's just the level of appreciation has gone down since beginning of the year, since last year. And that's because the interest rates went up. So the affordability of people went down a little bit, but the level of inventory is still really low. And as you'll see here from the chart, and this is more Orange County, this is more local. Right now we're about 2,000 listings on the market here in Orange County, right? If you compare it to the line up at the very top, which is 2019, we were at about 7,000 listings at the same time in 2019. So even if we get a lot more inventory, which I am hoping we do, we're expected to get, but I don't think it's going to reach the 7,000 mark. But even if that happens, that's going to be a really good thing for the market, because as you can see, there is a real shortage of inventory, and that's what's really causing the prices to continue going up. There's still demand, even if it's a little less, even if some people were priced out of the market because of the interest rates, but the level of inventory dictates that we're still seeing multiple offers, we're still seeing competition, we're still seeing all these things to a lesser extent, but we're still seeing them. So That's really what's been driving the prices up, demand and supply. And the one thing I want to share with you also is the impact of the rising rates on the home prices. Okay, as you'll see in this chart here, this shows that, and as you can see from the interest rates, this slide that we have up now, it's the impact of the interest rates on the home prices. You'll see that it doesn't automatically mean that when the interest rates go up, prices come down. It hasn't happened in the past in those many examples that we're showing here on the graph. Multiple times interest rates went up, and so did the home prices, because there are so many different dynamics going on in the market that affect the market. Now, the one thing that does have a negative impact, the interest rates have a negative impact on, is the number of home sales. And the number of home sales that are expected to close this year in the US or here in Orange County or in California is lower than last year. So this is something that, if you see it on articles, if you see it on videos, it does not show the market is weak or weaker than previous years. It just happens. This happens when interest rates go up, the number of sales comes down. And it's expected. Okay? The final slide I want to share with you here is, this is something I've been asked about a lot recently. We're talking about a recession, the Fed's talking about a recession that's coming up, all this stuff. How does a recession impact home prices, right? Because a lot of the people automatically come back to 2008 when they reference a recession. That's not the case. 2008 was a housing-related crisis. It was a housing-related crash. But we've seen multiple times, and this graph shows you, 4 of the past 6 recessions, home prices have gone up. So the fact that we're talking about an upcoming recession, who knows when, right? No one knows. But the fact that we are anticipating a recession sometime in the next 12 to 18 to 24 months does not automatically mean that the prices will come down. As you see, 4 of the past 6 times, the prices have gone up. So I hope this video was helpful, and I hope it helps you think more beyond what you're hearing on YouTube, on the fear-mongering videos and articles online that just scare people without the education. Here is the actual facts, and we'd love to hear from you. If you have any further questions, if you have any comments about anything you've listened to in this video, I'd love to hear from you and discuss it with you further. Have a great day.